and good morning. You're watching Market Cafe on ET Now with me, Snehi Shah, and my co-anchor Shreyansi Singh. Now, this is a show where we'll take you through everything that was happening in the world while we were asleep, all the important stories globally as well as on the domestic front. And in the second half of the show, we'll also talk about all the stocks that could be potential buzzers in today's trading session. It's clearly not in tandem with how we're dressed today in bright and cheery and green, but the US markets look the absolute other way around. So tell us what the global handover looks like.
Yeah, absolutely, definitely. So when you look at US stock futures, they were of course flat, but quite the fall, like you mentioned, when you look at the regular trading session. So the 30 stock Dow shed 1.35% for its worst day since March 2023. The S&P 500 as well lost 1.37%. And when you look at the Nasdaq Composite, a slump of about 1.8% coming in there as well. A hotter than anticipated inflation reading incited the sell-off as traders fretted that the Federal Reserve may not cut interest rates as early as they had hoped. More on the data later, but in after-hours trading, Airbnb also slipped more than 4% even as the company beat on revenue expectations in its latest quarter. Now, several big names are posting earnings, so you've got the likes of Generac and Kraft Heinz supporting earnings on Wednesday morning. Cisco Systems, Occidental Petroleum will also be issuing results after the close. So that's largely what you have to look out for on the earnings front. But when you take a look at the European markets as well, the Stoxx 600 index ended the session down 1%, compounding earlier weaknesses, a 2.7% decline for the tech sector led losses, while when you look at the financial services stocks as well, they lost about 1.7% in trade. So that's quite the handover coming in.
Absolutely, that's the handover coming in from the US markets. With that, let's also take a look at what the European markets did, because European markets also all in the red on my screen. DAX down 1%, FTSE down 0.8%, CAC down almost 1% as well, and overall Stoxx 600 also down a solid 1%. So we'll see how this pans out for us. With that, let's also talk about oil, because oil futures rose on Tuesday despite the stubborn inflation in the US that dragged the stock market lower. But what's key to notice, towards the end of the trading session, oil also began to fall. Now, when we talk about oil, we've got the WTI at $77.5 per barrel, Brent at $82.3 per barrel. Now, what's key to notice, WTI has seen a cut of 0.4%. Brent is also down 0.5% as we speak. Now, US crude and the global benchmark settled largely flat on Monday after rallying more than 6% last week as the Israel-Hamas war raged on, highlighting an ongoing risk to crude supplies if the conflict spreads further. Now, remember, the WTI has struggled to break out of a range of about $68 to $78 per barrel amid uncertainty over war in the Middle East and an unclear supply and demand outlook for the year. However, the WTI and Brent are both about 8.6 and 7.5% up respectively for the year, already into the year as well. Meanwhile, the Organization of Petroleum Exporting Countries, that's the OPEC, in its monthly report said that the demand is set to rise by 2.25 million barrels per day in 2024. Further 1.85 million barrels per day coming in next year. So a relatively strong forecast banking on strong global growth, expecting a further upside in oil prices as well. Now, a further boost to economic growth could give additional tailwind to oil demand. Now, remember, OPEC's 2024 forecast is already higher than that of other forecasters such as the IEA. OPEC said a positive trend for economic growth was expected to extend into the first half of 2024. So amid, on one hand, you have the economics playing in on the demand and supply front. On the other hand, you have a whole host of geopolitical factors also coming into play. So, well, Shreyansi, we'll see how both of these come together and pan out for the oil markets.
Absolutely. And speaking of global cues then, you've got crude oil inventories in the US, and from the UK, you do have the CPI as well as PPI data. From the Eurozone, keep an eye out for industrial production data as well as GDP data coming in. And on the earnings calendar, of course, you have ONGC and M&M. Now, it's the last day to buy for special dividend for Sumitomo Chemical, so keep an eye on that particular counter as well. And a host of stocks where it's the last day to buy to be eligible for dividend. So the likes of P&G Health, Minda Corp, Good Luck India, Dhanuka Agritech as well will remain in the spotlight. Now, in the primary market action, you of course have Rashi Peripherals IPO that is listing on the bourses. So keep an eye on that particular IPO, and the lock-in period ends for Concord Biotech. So that counter will also remain in the spotlight. Now, in terms of other events, of course, you have Himachal Pradesh budget session that begins. PM Modi's visit to Qatar, as well as US launching the moon mission that will remain in the spotlight as well.
Well, alright, lots of cues to watch out for, but let's talk about the biggest global cue coming in this morning, and well, that's the US inflation print for the month of January. A rather sticky print coming in at 3.1% on a yearly basis. This reading is above the market expectation of 2.9%. The pickup in inflation does not change the expectation for the month of December.
Absolutely, and the Indian government signed a formal request to join the International Energy Agency, IEA, and the accession process has now started. This is according to the head of the organization, Fatih Birol.
Let's talk about some intraday moves on Wall Street then, because Lyft shares soared in extended trading but pulled way back after the company's finance chief acknowledged on an earnings call that the press release included a major error. The stock soared more than 60% minutes after the earnings release hit, but shares still traded positive on company's upbeat outlook, particularly that it will be free cash flow positive this year for the first time ever on the back of cost cuts and rising ride demand.
And global electric vehicle sales jumped 69% in January from a year earlier, but were down 26% from December, reflecting subsidy cuts or tighter rules in Germany and France, as well as seasonally weaker sales in China. Sales of fully electric cars or battery electric vehicles and plug-in hybrids hit 1.1 million in January, up from 660,000 in January 2023.
Well, and after briefly surpassing Amazon market value yesterday, AI giant Nvidia was seen threatening Alphabet's market value, the third most valuable company on Wall Street. Nvidia's ascent reflects its dominance in the AI chip market, crucial for tech companies like Meta and others that are investing heavily in the AI integration.
And Prime Minister Modi has arrived in Abu Dhabi for his two-day visit to the UAE. He was accorded a guard of honor and received by UAE President Mohammed bin Zayed. Prime Minister Modi thanked the UAE President for the construction of the first ever Hindu temple in Abu Dhabi ahead of his inauguration today. PM also took the opportunity to introduce UPI RuPay card services in Abu Dhabi. PM Modi addressed UAE and India relations as well as the significance of IMEC in his opening remarks. Here's what we got.
हर क्षेत्र में हम लोग जिस प्रकार से आगे बढ़े हैं और आज भारत और यूएई के बीच में हर क्षेत्र में एक साझी भागीदारी हो रही है। आज भी हम कई महत्वपूर्ण फैसले करने जा रहे हैं। हम यूपीआई मेरा और हमारा जीवन कार्ड, इन दोनों का एक प्रकार से एक नया युग शुरू हो रहा है फिनटेक का। आईमेक में जिस प्रकार से आपका सहयोग मिला है, आपने आईमेक को आगे बढ़ाने की दिशा में जो काम किया है वो मैं मानता हूं। ऐसे भी हमारे प्रेसिडेंट थे कि जिन्होंने दुनिया को दिशा दिखाई और इतना बड़ा महत्वपूर्ण कार्य आने वाली पीढ़ियों के लिए आपने किया है।
Alright, we leave you with that on this segment as we slip into a very short break on this edition of Market Cafe. But don't go anywhere, because we'll be marking how the Asian markets have opened up this morning. Key market to watch out for after the global global headwinds that we've seen, pardon me. So we'll come back and you stay tuned. Hi there, welcome back and thanks so much for staying tuned in to Market Cafe. You're still watching ET now. Let's talk about a sector particularly, and that happens to be cement, because even as demand for cement recovers, prices continue to moderate across the country. My colleague Somit gets in all the details of Nomura's channel checks for the month of February. Somit, take it away.
Well, the channel check is indicating that the prices have continued to moderate even in the month of February instead of a price hike expectation that was there at the start of the month. However, demand has recovered in the month of Feb on a month-on-month basis. Now, pan-India FEC prices in the month of February have declined by around 8 rupees per bag compared to the previous month, while there has been marginal improvement in demand. Dealers are expecting cement demand to improve further, led by volume push from the company's side, given that Q4 is generally a seasonally strong quarter for cement companies. subsidies. Now, when it comes to region-wise, if you see, southern region has seen the biggest decline in prices on a month-on-month basis, around 13 rupees per bag decline, and on a sequential basis, on quarter-on-quarter basis, if you see, the prices are now down nearly 35 rupees. The prices have continued to moderate post the October 2023 big hike that we had seen, and the reversal in pricing was generally attributed to subdued housing demand due to festive holidays in the month of January and because of slowdown in state governments' expenditure. When it comes to the eastern region, the prices have declined by around 8 rupees, and on a quarter-on-quarter basis, the prices have come down by around 26 rupees. Now, major price decline has been witnessed in the West Bengal by around 13 rupees. However, there has been some strong demand improvement that the dealers are indicating in the central region. When it comes to the northern region, the prices are down around 5 rupees per bag, and on a quarter-on-quarter basis, the prices have come down by around 17 rupees. But there has been a strong demand improvement in the northern region due to improving weather, lifting of ban and construction activities, especially in the Delhi NCR region, and also cement dealers are indicating that the demand could further improve in the remaining month of February and in the month of March going forward.
All right, Somit, thanks for those details. But Eris Life Sciences could also be in focus after reporting an inline set of numbers for the third quarter, and the company also announced a major acquisition of Swiss Parenterals. So this is for a consideration of 640 crores. Take us through their earnings fine print as well as this particular acquisition.
Well, if you see on the earnings front, the numbers are pretty much in line with what the street was expecting. The revenues were up around 59%. EBITDA was higher by 28%. Margins expanded by around 368 basis points, while net profit was largely flat on a YOY basis. But the bigger announcement was the big acquisition that the company did nearly 51% equity stake in Swiss Parental for a consideration of around 640 crore rupees. Now, of this, 200 crore rupees will be paid upfront, while the remaining 440 crore rupees will be paid at the end of 1 year post the completion of this acquisition. Now, this acquisition is expected to complete by the end of FY24. Now, in addition to this, Eris Life Science promoters will also be acquiring additional 19% stake in Swiss Parentals. Now, this acquisition will boost Eris's portfolio in sterile injectable segment in more than 80 countries, and going forward, the company would require additional investment of close to 40 crore rupees towards its manufacturing capacities and to enhance its front-end sales as well. Now, as per analysts, the deal is marginally EPS negative when it comes to FY25, but it is EPS accretive or EPS positive when it comes to FY26 basis. So largely this deal is positive for the company. Now, the company has been on an acquisition spree. Now, since FY22, it has acquired more than 6 companies, and the deal values of these companies have been anywhere between 300 to 640 crore rupees, and the acquisition valuation multiples have also been in the range of around 3.3 to 4 times. Now, on the outlook wise, given the FY24 guidance, the Q4 seems to be a bit on the weaker side, and that is because of seasonality factors. But FY25 revenue guidance that the company has given indicates a 35% revenue growth. Now, they're expecting the FY25 revenue to be around 2,700 crore rupees, while the FY29 revenue guidance that the company has given indicates a revenue CAGR of nearly 20% from FY24 to FY29. On the leverage side, the company has said that after this upfront payment of 200 crore rupees, the company's net debt would be close to 890 crore rupees, and going forward, also the company would target to keep that debt to EBITDA at a level of around 2 to 2.3 times. And
let's take a look at what the numbers look like on a sequential basis. You have revenue that has gone up 1%, and on the other hand, EBITDA has seen just a slight increase of 0.3%. What's the key concern is that the net profit on a sequential basis has fallen by 2%, coming in at 996 crore versus that 1016 crores that it logged in last quarter. So, well, that's largely that's the fine print coming in on Eicher Motors. But here's what we got from the management on their con call and what they had to say. Listen in.
The all-new Himalayan, first and foremost, which is on the all-new Sherpa 450 engine. This was done in Goa at Motoverse. The new Himalayan has set absolutely new benchmarks in the world of adventure touring across all markets. So it's been, the reception from consumers, experts has been absolutely amazing. And we've won the extremely prestigious Indian Motorcycle of the Year award for 2024, which is our 4th IMOT win in the last 6 years. And we won it in 2023 for Hunter, 2024 for Himalayan, so it's consecutive win as well. But it's the 4th out of 6, and really it's a testament to the strength of the new products that we're coming out with in the last many years.
Well, that was what the MD and CEO had to say about their results, but let's take a look at what brokerages are saying. Now, CLSA has upgraded the stock to underperform from sell, and they've also hiked the target price to 3,906 from 3,716. Now, they're seeing that the
continues to have strong business fundamentals. The company's intrinsic value remains intact, and I have chalked out a firm and structured plan to bring back our margin to industry-beating levels and drive growth for the future. Gradual recovery in margins is expected to reflect from the second half of financial year 2025. We certainly expect the financial year 2025 margins to be meaningfully better than financial year 2024. Financial year 2026 aspiration will be to target an 18 to 20% industry-leading EBITDA margin profile. State aspiration will be to target 8 to 10% CAGR revenue growth, with digital business growing at a much faster pace.
Well, moving away from that then, Paytm is in talks for expanding business relations with other lenders. ET now has learned from sources that the parent company, 197 Communication, is in talks with at least 5 lenders for tying up as payment service provider banks. Ankur Mishra is standing by with more details. Ankur?
Yes, sources say that Paytm is in discussion with at least 5 lenders for a tie-up on payment service provider banks. Now, this means that wherever Paytm Payments Bank was a partner for 197 Communications, they want to replace it with other lenders, and for that there has been meetings. They have reached out to banks, and these banks include ICICI Bank, HDFC Bank, Axis Bank, Canara Bank, as well as State Bank of India. We were part of the payment system, but ever since there has been an embargo on Paytm Payments Bank by the regulator, other lenders are also careful and wants to take feedback from the regulator before going ahead with this kind of tie-up. Now, as far as the Reserve Bank of India is concerned, we understand that the tough stance of Reserve Bank of India continued, whereby FAQ is expected by Reserve Bank of India, so that various queries which are there on Paytm Payments Bank, those can be answered.
Well, thanks Ankur for joining in with all of those details, but stay on with us because we learned from sources that SEBI has decided to continue the abeyance of Manappuram Finance subsidiary company Asirvad Microfinance's IPO. So Ankur, bring us the details on this and tell us what's happening and why is this IPO still in abeyance?
Yes, sources say that market regulator SEBI has once again kept Asirvad Microfinance IPO in abeyance, and we understand that has been kept because there has been queries which were raised by the regulator, and the regulator is yet to be satisfied with the responses which is given by the company. We understand that company has already submitted the responses as per the queries which were raised by the regulator. We also understand as per company that this is part of a regular procedure, because sometimes when regulator asks key questions about the IPO, the company comes out with details to the regulator, and this usually takes usual than longer time ahead. Remember, this IPO was filed in the month of October as far as DRHP is concerned, and after that the approval of regulator was awaited for further proceedings. But till now we understand that regulator has not cleared the IPO and it has been kept in abeyance.
Well, time for a quick break right here on Market Cafe, but we'll see you with more news and updates on the other side.
Hi there, welcome back and thanks so much for staying tuned to Market Cafe. Now, I'm being joined by my colleague Ansh, who's here to take us through the derivative snapshot for the day. Ansh, good morning. Well, we did see some recovery on the Nifty yesterday, but that's not expected to continue today. So tell us what the futures and options snapshot looks like today. What's the derivative setup looking like?
Right, good morning Snehi. So as you can see in the chart, Nifty has been hovering around the 20 DMA from last 3 consecutive session, and in the previous session it has managed to close above that level. Now if we talk about futures and options, then in futures we are seeing open interest increasing by around 1.2%, indicating long build-up happening, which is kind of a bit of a positivity. Whereas on option front we are seeing call covering happening at around 21,800 followed by 21,900, indicating traders are not very optimistic of Nifty climbing over this level. Whereas on downside we are seeing active put writing happening at 21,500 level, which indicates that option traders are expecting Nifty to have a good support base around this level. Let's have a view on Nifty Bank as well. So if you can see the chart, Nifty Bank has been taking good support at that 200 DMA for 4th consecutive session, indicating a bit of positivity here. Whereas on option front, we are seeing call covering happening at 45,600 followed by 46,000 level. Similar story to that of Nifty. Traders are not very optimistic of the index climbing over these levels. Whereas on downside, we are seeing active put writing happening at 45,000 level, indicating good support around this level. Let's see what FIS did. In index futures, they added around 5,600 longs, but they also added 1,600 shorts. But net to net, we are seeing a net addition of around 4,000 contracts, due to which the total FI long position have inched higher from 34.1% to 35.2%. Now, despite longs going up, shorts are also increasing. So currently, the total shorts are around 1.8 lakh contract, which is the highest in 2 months, showing that FIs are also getting a bit of cautious. So in short, there are mixed signals coming up, but traders are surely getting cautious in this market. Also, the overnight global pressure due to higher than expected US inflation may have an adverse impact in Indian market. Also, today we have Bank Nifty weekly option expiry, so keep your stop losses tight.
Absolutely, Ansh. Thank you so much for taking us through the futures and options roundup this morning. But which are the counters that you're keeping on your radar on account of news flow?
Right, so National Aluminium will be the first. One cannot take any position in future market, but can surely take positions in cash market. Apart from this, IRCTC will be in focus, a buzzing stock. Your revenue is up by around 21.8%. Net profit is also managed to be up by around 17.4%. Prestige Estate is also in focus, where revenue is down by 22.5%, but they have managed to be in green when it comes to net profit, which is up by around 2%. Gujarat Gas is also in focus, as the net and revenue is up from 3,845 crore to 3,929 crore, but the PAT has come down by around 25%. NBCC, the revenue is up by 13%, net profit is up by over 58%, which is a bit of a positivity coming in this stock. Also, Rashtra Chemical, here we are seeing revenue up by 18%, but then profit after tax has gone down by around 78%. Lastly, All India will be in focus. The revenue is up by 3.5%. Also, net profit in line with the revenue is up by around 3.1%. So keep an eye on the stocks.
All right, Ansh, thanks so much for taking us through that. All of these stocks will be in focus on the back of their quarter-3 earnings as well as news and updates. But another counter that will be in focus today is Sula Vineyards, because it came out with a weak set of quarter-3 numbers on a year-on-year basis. The numbers have come in largely below what the street was penciling in. So Ashesha is here to do all the number crunching for us. Good morning, Ashesha. Break down these numbers for us, please.
Well, yes, Sula has reported weak set of numbers, much lower than what the street was working with. Remember, third quarter is a seasonally strong quarter for the company, and despite that, the company has reported weak set of numbers, and hence the stock is expected to be under pressure today. Operating performance has been a bit weaker as compared to financials. Own brands volume growth came in at 4.6% on a year-on-year basis. To say that valuations are still at a discount, and PSU banks have significant headroom from the current market prices. So positive report that has come in on PSUs from Jefferies. Apart from this, Adani Enterprises, Jefferies has initiated coverage on this counter with a buy rating and a target price of 3,800. They say regulatory overhang is largely behind for the company. Balance sheet is well placed to take up rise in capex. So they have initiated coverage with a buy rating, and 3,800 is the target price that they have given on Adani Enterprises. Lastly, let's talk about IndiaMart Intermesh, where Jefferies has initiated coverage with a buy rating and a target price of 3,400. They say this offers opportunities for growth of about 19% revenue CAGR over the period 24 to 26 and EBITDA CAGR of about 25%. So very positive report that has come in. They've initiated coverage with a buy rating and a target price of 3,400.
Alright, Rachesha, thanks so much for taking us through that. We'll be keeping a close eye on all of these counters. But with that, I'm afraid we're completely timed out on this edition of Market Cafe. From me, Sneha, my co-anchor Shreyanti Singh, and the entire team that put this show together. Thanks so much for watching. But as we bid you goodbye, you stay tuned to the channel because the market takes all the action.